So when it comes to breakaway gaps, I get a lot of questions asking, how do I know which fair value gap to trade, which ones should stay open? And I promise you guys it's really simple. It's just based on momentum and order flow. So when it comes to breakaway gaps, if we have an instance like this where we have two fair value gaps here, first it's important to note that breakaway gaps are useless if you don't have a bias in place already. If you don't have a clear drawn liquidity, if you don't have a directional bias, breakaway gaps are of no use to you, okay? Why is that? You want to see breakaway gaps form in the direction of your bias. So here we are in the last hour of trading, 3:15 and 3:45, and we've traded into, if you watched yesterday's market review, up here we had a 15-minute fair value gap, okay, and we traded up into that, and then you see us starting to reverse. So let's say I draw on liquidity, our lunch lows, okay, that's this low down here. We need that. That's important. If we're looking at breakaway gaps, we need to know where our drawn liquidity is. We have to have a bias because that's narrative. So if we're looking for sell side down here to be taken during the final hour of trading, and we're looking for a setup between 3:15 and 3:45, all right, we get to our charts here, and we see this move here. Your chart is going to look like this. Now, how do you know which fair value gap to trade? Do I trade up here? Some people like to trade bearish order blocks. They may be waiting for price to come all the way back to this up close candle. Okay. Where do you get your entry? Well, this fair value gap here is a breakaway gap. You don't want to see this traded to. Okay. If we ever have two fair value gaps like this, and this is like a large momentum candle, leaving this kind of slow rally higher, really kind of lethargic, and we get some big displacement here, you want to see that stay open. This lower one here is where you always want to get your entry, but your stop loss has to be above consequent encroachment of this higher fair value gap, because price can trade up into this fair value gap, yes, but it can wick into this upper one here and then sell off. So whenever I have an instance like this, my entries always look like this. Entering at the low of the fair value gap, I'll always measure consequent encroachment, and my stop loss is going just above that. Okay, so you don't have to put your stop loss above this swing high. That's way too much risk. Above consequent encroachment. And then, boom, you're tagged in. The idea is we're looking for sell side to be hit down here. This higher fair value gap is a breakaway gap, a lot of momentum, a lot of speed. Okay, if we're bearish, it doesn't make sense to leave this price action here with a lot of speed, a lot of force. It doesn't make sense for us to explode away from it and then come all the way back and touch this last up close candle. That's not signs of heavy order flow. Okay, we're bearish. We want to see sell side. We want heavy, fast order flow targeting sell side. So we don't want to see an optimal trade entry here. I know a lot of people trade that. Okay, I don't want to see price come back up to a 79% retracement level, because if we do that, we're trading past consequent encroachment of the breakaway gap, not what we want to see. Okay, but let's get some more examples here. All right here. I also get questions. People ask, okay, what if it trades down into the breakaway gap? Are you not using that as an entry? Is that not a trade? Most times, I don't enter breakaway gaps because I'm using that as insight. So let's say right here, this fair value gap, breakaway gap. Why is it a breakaway gap? Let's assume I don't have any daily levels pulled up, but just using what we have on the chart, we've taken out sell side. This is lunch lows. All right, and let's say, just for the sake of this teaching point, we're trading down into like an hourly fair value gap down here. All right, taking out sell side, trading into a higher time frame PD array. What do we have here? Whoops. Oh my gosh, I can't work TradingView today. This is a consolidation. Fair value gap, breakaway gap. Just because it's a fair value gap doesn't make it a breakaway gap. It's because it's in the direction of our bias. We have clean highs up here that formed during lunch, way too smooth. We've taken out sell side, trading to a higher time frame PD array, and we're getting a fair value gap in the direction of our bias, which is short-term bullish. This is a breakaway gap. Ideally, I want to see this stay open. Me personally, I don't like trading this one here. This is the fair value gap I like to get my entry in. the one that rests just above a breakaway gap, that's the one I like to see send us higher. But I'm using this as insight. So price can trade down. That's not a problem. Okay. I'm watching consequent encroachment and below. So as this candle is trading live and it's trading down, I'm not buying that because I want to see if we leave this fair value gap open. Now, if we leave this fair value gap open and we start to run away, that's my confirmation. Okay, that's my market structure shift. That's my verification, confluence, whatever you want to call it. If we leave this fair value gap open and start to move away, my mindset is I'm looking for the next buying opportunity to go long, trusting that we're not trading back down here. So fair value gap here, I'll probably use that as my entry. Same rules apply. Buy the high of this fair value gap just to make sure you get into the trade, and you don't have to put your stop loss underneath this low all the way down here. Put it just below consequent encroachment here. Is that not a good entry? A little bit of drawdown. What is that? Maybe 8 handles or so. Target your equal highs up here. Buy side. All right. So if we know we've been consolidating, okay, our bias is already bullish. We're already expecting higher prices. Dollar's looking heavy. And we're consolidating like this. Consolidating. And boom, we get this massive candle. I want you to think of it like this. Imagine whenever you see a large candle like this, explosive candle outside of a consolidation, and it's in line with your bias. Okay, our bias was bullish. We're getting this large momentum candle, large fair value gap in the direction of our bias. I want you to see that as like a train. Okay, think of a fast train going 300 miles an hour. It's a rocket, right? It's blasting through super fast. Trains aren't going to go 200 miles an hour this way, stop on a dime, and come all the way back down here. That's not what we want to see. Okay, trains are fast, one way, like it's in a hurry. Trains are going, it's moving. Okay, so I'm seeing breakaway gaps as like a train. Consolidating, we're bouncing around, not doing anything. Train comes through, boom, blast through it. I want to see majority of this fair value gap, if not all of this fair value gap, stay open. Okay, that's my mindset behind a breakaway gap. So we get a massive, fast train here, blasting all the way through. We drop down. This is fine. That's a buying opportunity. I want consequent encroachment, okay, midpoint of this fair value gap, and below, I want to see that stay open. That shows me signs that order flow is bullish. Clearing out the sell side, trading inside of that daily fair value gap, we rally. Fair value gap here, it's a breakaway gap. Why is that a breakaway gap? What were we doing before we get this fair value gap? First of all, our bias is bullish. We already established that. We're consolidating, boring price action, not doing anything. Boom, massive train blasting through, fair value gap, hello. I want to see that stay open. Okay, this train is leaving. We don't want to see a train blast through here and then turn around and come back, fill it in. That's not bullish. That's not what we want to see. This train is gone. It needs to get out of here. We're leaving this area. We're leaving this consolidation. I don't want to see it come back. I want to see that stay open. That's what we get. This fair value gap here, that's permissible. We can trade into that. This one here needs to stay open, needs to stay unfilled. This one right here, the upper one, I'm interested in watching how price trades here. All right. Breakaway gap, buying opportunity. Trading to the daily fair value gap. What are we doing here? Consolidate, chopping around, rally up, come back down, boom. Massive fair value gap, train coming through, get out the way, I got places to be. Breakaway gap. Okay. Do you want to see a train blast through 300 miles an hour and then come back down? No, that's not signs of bullish order flow. We want to see this fair value gap run. Why? We're bullish. We're looking for targets up here. So once we see this fair value gap form after consolidating and going sideways, we want to see this thing stay open and continue to run, and we'll find a buying opportunity later. But I don't want to see an optimal trade entry here. I don't want to see us breakaway gap come all the way back down. That's not what we want to see. This needs to stay open. That's telling me that order flow is bullish. Breakaway gap. Why is that a breakaway gap? How come price only trades down into this higher one and not this one? That's a great question. What are we doing here? It's consolidating. consolidate, going sideways, chopping around, boring, sleepy price action. Here comes that train blasting through, boom. 200 miles an hour, fast, quick, energetic. We leave a fair value gap. I don't want to see that traded to. Why? We have objectives up here that need to be met. We're in a hurry. We need to get up here. We don't have time to leave a fair value gap here after consolidating just to come all the way back down, trade down to the low. It doesn't make sense for bullish order flow. This needs to stay open. However, this fair value gap here, that's the one you want to use for your entry. That's the better fair value gap. All right. What's also resting in this price action right here? Bullish breaker. We have a low, high, lower low. Take that breaker, jaw it through. This breaker is resting pretty much just above this breakaway gap. So do we want to see this fair value gap traded to? No. Why? One, it's a breakaway gap, yes. But also, we have a breaker here. So in order, okay, this is important. In order to trade down to the breakaway gap, that means we have to completely trade down to the bottom of this breaker. That's not what you want to see. You want to see the high of this breaker offer support because it's laying pretty much on top of this higher fair value gap here. So there's no need to come down to this one. So you can feel comfortable putting your stop loss below consequent encroachment. Okay, don't put your stop loss all the way up here. Okay, give it some room in case price does want to stab down, maybe like an institutional order flow entry drill. Take a quick little stab into this fair value gap. That's perfectly fine. Nothing wrong with that. And then we could rally. Okay, that's why sometimes in my trade ideas, you see me placing my stop losses inside of fair value gaps because I'm not expecting this to be traded to. Let's look at this a little bit more. Go over breakaway gaps one more time. Hopefully this is helping somebody out there because I get a crazy amount of messages asking how I know which fair value gaps to stay open. This is it right here. This is my entire thought process when I'm taking trades, reading price. This is how I talk to myself when it comes to breakaway gaps. Right here. Consolidate, 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 consolidate. How do I know this is a breakaway gap? How do you know it's not going to trade up all the way to this up close candle, this bearish order block, right? That's definitely not what I want to see. Why? Slow price action, consolidating, moving up slowly and not really doing much. Boom, train coming through, excuse me, boom. I want to see this stay open. That's signs of momentum. Momentum, strong, fast, energetic, scary, right? I want to see that stay open. The one just below it, that's what I want to see send us lower. And you could trust putting your stop loss above consequent encroachment of this fair value gap. Why? Because price can trade up into this. Okay, you don't want to hug your stop loss and put it here if you're entering short in this fair value gap that's being super aggressive. Put your stop loss above consequent encroachment. You don't have to put it above the high or above this up close candle. Put it above consequent encroachment because if price does want to trade to this fair value gap, poke his head up above this high, that's fine. That's perfectly acceptable. There's nothing wrong with that. As long as we leave the upper half of this inefficiency open, that's telling me that we're really bearish and we're heavy, all right? Get your entry in here, but allow for price to trade inside this fair value gap. And then you can see the result, selling off, taking out lunch lows, taking out this low in the AM session. So traders who made money going long all day, if they didn't close or take profits, they're taken out of the market now. And then we consolidate.